Hi everyone, let's have a look at my bullish and bearish medium time frame and low time frame Elliott Wave scenarios on Bitcoin, starting with a new very interesting scenario where we're looking for a WX and eventually a 3-wave in a wave Y that is still not finished. Now previously I had an alternative scenario being a 1-2-1-2 and a bigger 3 to the downside, but in my previous update I explained to you with many reasons why I do not prefer the bearish scenario to be a 1-2-1-2 and then a bigger move in a wave 3. So instead I've been looking at different scenarios, and the WXY is actually still a very legit scenario where a potential target is definitely the yellow target box over here between 24,850 and 24.3k with some very nice confluences. Now I have 3 reasons to believe why this move to the upside might not yet be the move we're gonna get for continuation to the upside. And one reason I will show in the low time frame Elliott Wave count, which is coming at the end of the video, but the first 2 are written over here. So first of all, there are no bullish CVD divergences on the lower time frame over here, which basically means there were no big positions absorbing market shorts, because what you want to see on the CVD in this range over here, this is the most recent move to the upside on the low time frame. We're on the 15-minute CVD chart over here. What you want to see is price moving to the upside, retracing to the downside, creating a higher low on price but a lower low on the CVD, which basically means that in this retracement to the downside, more people are actually market selling than people were market selling in the low that was made, which basically means that price creates a higher low even though there are more sells. So someone is absorbing those sell orders for then a move continuation to the upside. But we have not seen that on the lower time frames, which is a little bit suspicious, right? So it's something that is playing in my mind. And secondly, where we bounced over here, yes, we did have a support resistance area, which was this area over here. We found resistance on the move to the upside, and then when we came to the downside over here, we found support on this area, but it's not necessarily that strong of a support area, right? This area over here only having a simple support resistance flip, and no target box was hit. And I am quite like, let's say, connected to my target boxes. I like my boxes to be hit, and there's still one over here that has not yet been touched, and I didn't have any target area over here. So that is also something that is playing in my mind. So whatever you do with trades, if you've been in longs, for example, make sure you manage your trades very well, stick to your plan, stick to your validation, trade your strategy, whatever you have, but make sure that in case price might move to the downside, as it just hit my target box here as well, by the way, make sure you are at least prepared and trade safe for potentially a move to the downside, right? Then if we go to the bullish scenario, then we are looking at an already finished wave, which then is a wave A, wave B, and then this is a wave C to the downside. So this is a 5-wave move in a wave C, and now this is finished. The most common target area for a wave C is between the 1 and the 1.236, which price has hit very nicely. So in this particular scenario, we expect upside. Now, the potential trading scenario that we had over here was entering at the 1-to-1, stop loss below the 1.618, as that is a rare target for a wave C. So therefore, that is also basically the invalidation, as you don't expect price to go all the way down here in this scenario. And then we're looking for a move to the upside. Now, if entered in this target box, stop loss, most likely, no financial advice, should already be break even. And then of course looking for a move to the upside. Now this is the first resistance area we have, so one, can trade to the upside with a potential take profit at this area, and if price continues, it's great. If price moves to the downside, then the stop loss at break even is hit, but you still had some profit, so it's still a winning trade, right? That is how you can trade sensibly, right? You never know what the market is going to do. It might go up, it might go down, but trading wise, you have your edge, you have your strategy, and you trade sensibly as a good disciplined trader, right? So in this particular scenario, looking for upside, where still an interesting target actually to the upside is the 2022 range highs at 32.4k, which are the highs that are over here. So if I actually put this on my chart, you see these highs are at 32.4k, which still is a very interesting target. And also in the bearish scenario, if price is going to move to the downside to the yellow target box and finds support over here, maybe then creates, let's go to the bearish scenario, by the way, maybe, and put on the target box, if price would move to the downside, then moves to the upside, gets a retracement, maybe some bullish divergences on the CVD, that would be something nice to see, then a potential entry. Then if we get that move to the upside, I would still be looking at the 32.4k level to take those highs. So yeah, that's just an interesting level in general. If you then look at the range, now as mentioned, I do not really like the fact we didn't necessarily backtest this area. We had a backtest, for example, over here, not here. This went very quickly to the downside, but you see we got back up, right? So yeah, we moved into the range, didn't yet hit the point of control at 28K, but the target box of resistance is below the point of control. So maybe we're not even going to reach it, right? But what I like to see, or would prefer to see, is a backtest of the value area low, which can also backtest basically a support resistance area, resistance here, potential support over here. And then the question is, will it hold, right? If it holds and it moves back to the upside, taking these highs, so basically what we're then looking for in the safe scenario for a safe entry, as explained in many of my previous videos, the safe entry is to see this move to the upside, wait for a backtest, and if price moves up, then the entry could be once you take the high, and then the stop loss is going to be below here or below here, right? So also your stop loss will be shorter, so a higher risk to reward than having the stop loss over here in this scenario. The more risky one is to just enter, but you of course have to have your plan and know what you're doing. So if we do get this move to the upside and then break the high, it can be interesting to look for the point of control, look for the value area high, as well as looking for the triple top that we have over here at 30K. So those are a couple of interesting targets to look for in case that would play out. If we then go to the lower time frame scenario, this is the bearish scenario. So let me open the target boxes again, where we are looking for a WXY. So in this scenario, we have an expanding flat in the W over here, which is an A, B, C, very, very nicely respected. Both the target of B and C have been hit very nicely. Then we have this as a wave X that retraced to the 382 that is pulled from the beginning of the expanding flat W to the high of W, and the 382 is a common target for a wave X. So this is absolutely fine. And then we have a 3-wave move in eventually a wave Y, where the most common target for wave Y is the white box over here between the 1 and the 1.236, which is between 27.4K and 27.6K, with a rare target for wave Y being the 1.618 at 27.9K, basically 28K all the way up here. So that is something to think about. If we think about that bearish scenario I showed you on the medium time frame, right? This is a very important area of resistance for potentially that bearish scenario. So whatever you do, make sure you trade safe and responsibly. If price would move to the upside and close above the 1.618 over here, we have to think about some other bearish scenarios that might happen on the lower time frames. But as it stands now, we have been ranging here for a while, of course, as you can see, and nothing is really happening. It's just some sideways action today. And if we zoom in to what we are actually seeing, let's go to the 5-minute. Nothing too crazy. I mean, we just made a new high over here, so there's no bearish nor like bullish divergences. But if I actually go to the 30-minute, now I remember I did want to show you something, because what you're seeing over here is you see a range here on the left side of the CVD chart, and you see the high that we made at the moment. Now the high that we made at the moment, as you can see, is lower than this high, but on the CVD line, which you can clearly see as well, the yellow horizontal line, we are creating a higher high on the CVD, but lower highs on price, which is a bearish CVD divergence between the highs that we have over here and the highs over here. Lower high on price, higher high on CVD. So it is definitely something, again, to take into account, because in this whole structure, we haven't seen bullish divergences, but we do start to see a little bit of bearish divergences, and also we could see them already happening over here. Oh, of course, I don't have my brush on the AGGR chart. So over here in this range, we made lower highs on the chart. So lower high, lower high, lower high. But the yellow CVD line was creating a higher high and then another higher high. So we did have some bearish divergences in this range over here. Now they already played out with this move to the downside, so it's basically neutralized, but it is still interesting and something good to think about, that we didn't have any bullish divergences over here, but we start to see some bearish divergences in this area. Even though they've played out, still good to know, right? You got to be informed, and that's my aim. I try to not only update you and educate you, but also inform you. Hopefully it provides some insights for your trading and trading decisions, but of course, no financial advice, right? It's YouTube. So then we go to my final scenario, and also an additional reason why potentially the bearish scenario is something to think about, which has to do with this wave 2 over here. So if this is the low of something and this is a wave 1, then this has to be a wave 2, which is a very, very shallow wave 2 as it retraced to the 0.236. Now officially, from an Elliott Wave point of view, the 0.236 is not even a target for a wave 2. However, in the history of Bitcoin, with the volatility it has, sometimes retracements are extremely shallow. So one could say the 0.236 is an extremely rare target in a very bullish market environment. But nonetheless, it is very, very rare. So seeing this, you know, you have to think twice, right? So in this scenario, the 0.236 is the bounce for then a wave 2, even though it ended over here in then a corrective pattern, for then this being another wave 1 to the upside, retracing in a wave 2, and then continuation to the upside in a wave 3, pumping through this target box that we have over here, right? So that is important. The invalidation for the bullish scenario is price taking the low over here. And if price is going to pump towards the upside and find continuation, that is absolutely fine. And we're going to enjoy, of course, the profits from the trade that you have if you are in any long positions, for example. But whatever you do on the medium time frame, low time frame, make sure you trade safe, because the bearish scenario is still something to think about. And we should never have 100% bias, because in the end, we don't know what price does. But if you have a plan, if you have a strategy, if you have entry requirements, then you know what you're looking for, you know what you're doing, and you just simply trade your strategy. Now, finally, the news. Tomorrow at 2:30 p.m. on Tuesday, we have some high impact news. So this is Central East European time, by the way, so make sure to check your own time zone. So that might kick in some volatility to either direction, as we do not know. And then on Friday, we have some high impact news again, with Powell speaking as well at 5 p.m. Central East European time. So that's going to be some interesting times this week. Make sure, again, you trade safe, and I hope this video was helpful or valuable to you. Please check out the macro and the high time frame scenarios if you're interested. And for now, thanks for watching and subscribing, and see you at the next one. Bye bye.